Now we discuss another reversal pattern followed by lecture 26, falling and rising wedge. A rising wedge or a falling wedge is considered to be a reversal pattern. The falling wedge is a bullish pattern that begins wide at the top and contracts or squeeze as the price moves lower. It is look like a steep valley at absolute bottoms. This price action form a cone shape that slope down as the reaction of high and the reaction low is converged. It means prior the high and low are in wider sense, but after it will create a cone shape and the high and low are in the form of squeeze. Whereas the rising wedge is a bearish pattern that begins wide at the bottom and contracts or take a shape of cone at the top. The price move higher and the trading range is getting narrow. As the reversal pattern, the rising wedge will slope up with the prevailing trend uptrend. Whereas regarding of the type, rising wedge are the bearish pattern. In the simple language, rising wedge will create at the top of uptrend and falling wedge will create at the bottom of downtrend. In both the shapes, it creates a shape of cone and the direction of the point is upward or downward. Now discuss the rising wedge in detail. As you see, the rising wedge is a reversal pattern. The sample chart show on your screen. You see two blue lines which are in an upward direction and the prior trend is also upward, but the shape is look like cone. That means when the prices move higher, the shape is like become cone. This pattern is considered to be a rising wedge pattern. When the price break down this lower highs trend line, then it is considered to be a valid rising wedge. The breakout is always with high volumes and the price target is distance between the wider portion. Before finalizing the rising wedge, you have to check the key factors. The first important key factors in rising wedge is the prior trend is strong uptrend. The price move between rising resistance and support lines. The price create an higher high with convergences or contractions. The contraction are in the shape of cone. The contraction is done with a low volume. It means the prices move higher and the volume is getting lower. Volume and price create a negative divergence. Once the support break with high volume, the rising wedge pattern is getting successful and you will get a huge movement within a small fraction of time. I hope you easily understand the rising wedge concept. In simple terms, we have to remember the three things in brief. The first, the rising wedge will be made in uptrend and it is found at around absolute top. The price is getting contraction and the contraction will be in the shape of cone. And the third most important thing is the price and the volume are made a negative divergence. By the help of these three things, you can easily finalize and find out the rising wedge. Now we discuss the falling wedge, a reversal pattern in detail. As you see the sample chart on your screen, we see two blue lines which are made at lower highs and lower lows and are in a contraction form. When the price move at bottom, the contraction is getting severe. The cone shape which have the direction in downside is considered to be a falling wedge. Once the price break that upper resistance line, it finalizes the falling wedge pattern, and the distance between the wider portion of falling wedge is to be considered as the future price target of falling wedge. The falling wedge is considered to be the bullish reversal pattern. Before finalizing the falling wedge, we have to consider some key factors. The prior trend is downtrend. The price move between the resistance and support in a lower line. The price creates a new lower with contraction or in a cone shape. The contraction is with low volumes. The volume in the price creates a negative divergence. It means the price creates a lower low and the volume is also getting lower. Resistance break with high volume will finalize the falling wedge pattern. In brief, if we want to understand the falling wedge, we have to remember 3 points. The prior trend is downtrend and the price movement is contraction in the form of cone. The second thing, price and volume found a negative divergence. And the third thing is this, if the resistance break with a high volume, the finalization of pattern is considered.